we did this whole deck a couple weeks ago on the hotels, and it was extremely negative. The one exception is RHP. They're in a much better spot for many reasons. So I think their quarter is going to be really good, and I think they will have grounds to be really bullish on their outlook. And I think you'll see pretty bullish tones across the board for the hotel REITs, even outside of RHP. But for those companies, we have issues because, they can mask with leisure being so strong in July and August, and the group business coming back. They can really mask what's the big issue, and that's business transient is just not materializing like it should. But that will eventually come out, and especially after we get past the summer, because then the mix changes dramatically towards business travel, and we just don't see that coming back enough to make up for the void of the seasonal, loss of leisure travel. So it's going to look pretty ugly starting in September. Now, the honest management teams will allude to that. RHP, on the other hand, doesn't really have that issue because they don't have any business transient travel. It's all group, and it's all group and leisure essentially. But the other thing about RHP that's interesting, I think, relative to the group too, is that they spent a lot during the COVID downturn. So their properties are well maintained. They didn't drop the maintenance capex at all, and some of the other companies really did, like Park PK, which is a stock we do not like at all, and they're going to have serious deferred capex issues. So their free cash flow is going to be stunted for the next few years, and that'll prevent them from paying maybe big dividends or buying back stock or doing anything fun like that.
People, they're perpetually asking themselves on these hotels if it's priced in. It's like, well, go back and ask yourself only a week ago, not even a week ago, on JP Morgan, like the guy literally told the world that shit was hitting the fan and it wasn't priced in. I mean, I by the way, on that day covered a bunch of my JP Morgan short because it's a big short position, and I wasn't pressing the short because that was the day to cover the short. Now today you can reshort more JP Morgan, or when Pebblebrook blows up, or when any hotel stock that Todd doesn't like blows up. That's not. We'll see what's priced in when they actually print the news.
Yeah, there's a lot of downside. I don't care where the stock has come from in the last few months or this year. It's where can it go? And I think a lot lower.
Every single cycle, you have to learn new lessons, and some of the old ones all over again. And for a lot of analysts on Wall Street, because they work for somebody, that's the lesson, is that just where it came down from means nothing. Go back to where it came from before it went up pre-pandemic. Start with that.
I mean, and we talk a lot about, you and I and other people at Hedgeye, like cheap stocks can get cheaper, expensive stocks can get more expensive. For the hotel rates, we're not even at that level to have that discussion yet because they're not cheap. And when we get to cheap, then we can have that discussion, but they're not even cheap yet.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.